Hello and welcome back to Explain the Charts. Today, June 12th, 2025, we're analyzing Apple, APL, stock, looking at both the latest news and the charts to determine potential trading strategies. Recent news surrounding Apple's WWDC 2025 event has been mixed, with some analysts underwhelmed by the company's AI announcements. Yahoo Finance suggests Apple is taking a slow road with AI, which contributed to a drop in market value. Despite this, Goldman Sachs reiterated a buy rating with a $253 price target. Also, recent data indicates a 5-year low in U.S. consumer intent to purchase new iPhones, so let's examine the charts to see if these events are impacting the price action. Let's start with the daily chart to get a broad perspective. Looking at the one-day chart, we can see a significant upward trend starting around early April 2025 after Apple bottomed out around 170, with the price hitting a recent high of around 255 around December 20th, 2024. However, early in 2025, there was a steep drop in price that quickly recovered. Apple is currently trading around 198, which is lower than it's been for quite some time, so let's see if that's an indicator of anything. The 52-week range is between 169.21 and 260.10. Currently, the price is closer to the lower bound of that range. Looking back a bit, we can see some support around the 170 to 180 price level, so it could be a good time to buy. If the stock breaks below this support level, we could see further downside to the 169 area. However, if it holds, there is potential for a bounce back towards the 210 to 220 range. Let's switch to the 1-hour chart to examine recent price action more closely. On the 1-hour chart, we see a clearer picture of the recent decline. The 1-hour chart reveals a downtrend that started in early June, coinciding with the WWDC event. The failure of the AI announcements to excite investors seems to be a key factor. We can observe some minor support levels around 200 and 198. If the stock breaks below 198, we could see a test of the 195 level, which could present a good buying opportunity or further downside risk. Currently, the stock is at 198.78, so if it breaks 198, it's likely going to 195, at which point it might recover. However, if the 198 level holds and some positive announcements get released, the stock may bounce up closer to the 210 range. Let's narrow our focus to the last few days on the 15-minute chart to examine the very short-term price action. The 15-minute chart shows consolidation around the 200 level, followed by a breakdown after WWDC. We can see the price attempting to recover, but facing resistance around 203.50. The stock is in a downtrend, so be cautious and watch for it to break out above 203.50. If it breaks, it will likely continue in that direction for some time, maybe even hitting the 210 range. However, in the short term, the overall sentiment is bearish, so there's probably more downside risk in the immediate short term, so be cautious. In summary, watch the 198, 195, and 210 levels. A break below 198 could lead to a test of 195. A sustained move above 210 would signal a potential bullish reversal.